Hello everyone, I'm Shannon Kelly, Social Media Manager at the Toronto Real Estate Board. Now just as temperatures continue to increase in the month of June, so did price growth. And here to discuss this further is Jason Mercer, Senior Manager, Market Analysis.
Thanks very much, Shannon. We had another strong month in June with over 9,400 transactions, but it is important to note that the number of sales was down this year compared to last. We saw a 5.4% decline, but it's interesting to note that this decline was driven by the 416, where sales were off by a little bit more than 13%. If you look at the rest of the TREB market area, so the 905 regions plus South Simcoe and Orangeville, we saw sales about on par with what we saw this time last year. Now, if we think about the reasons behind this differential in sales growth between the 416 and the rest of the Toronto Real Estate Board market area, one of the key factors looks to be the land transfer tax in the city. Now, recent polling conducted by TREB has suggested that those people looking to purchase a home over the next couple of years will certainly look at purchasing a home outside of the 416 because of the added upfront costs associated with the land transfer tax. So again, we feel this goes a long way in explaining why we're seeing sales down in the 416 where they're flat in the other regions within the TREB market area. Now, market conditions have remained tight enough in the GTA to still see considerable price growth on a year-over-year basis. So, for example, the average price is up by 7.3% to over $508,000 in June. Now, this price growth is driven by the low-rise segment of the market, both in the 416 and the 905. We're continuing to see a lot of competition between buyers in many neighborhoods for low-rise home types, so singles, semis, and townhomes. On the high-rise side of the market, when we're looking at condominium apartments, we continue to see prices grow, but closer to the rate of inflation. And this is because we're seeing a little bit more supply in the marketplace as we've seen strong completions over the last year or so, and so a better supplied market has seen a little bit less upward pressure on pricing in this market segment. Now, discussion of home prices wouldn't be complete without addressing the latest changes to mortgage lending guidelines announced by Finance Minister Jim Flaherty. And so now the maximum amortization period that a home buyer can take on is 25 years with a minimum down payment of 5%. But even with these new stricter guidelines, we still see that home ownership is affordable in the GTA, with about 35% of the average household income going towards mortgage principal and interest, property taxes, and utilities for the purchase of an average-priced home. And so this still gives quite a bit of wiggle room for home buyers, whether we're talking about interest rate hikes moving forward or continued price growth, because this is still well below Minister Flaherty's ceiling for affordability, which he set at 39% in the same release. So looking forward through the second half of 2012, we do expect to see sales remain quite strong in the Greater Toronto area, but we're also going to be entering a period of better supplied market conditions, and so we do expect to see a bit of a moderation in price growth as we move towards the end of the year and into 2013. So with that, Shannon, back to you.
Thanks so much, Jason. Really looking forward to July's highlights. Now, you can still connect with us on Twitter at TREB Home, as well as on Facebook, and have yourself a great July.